Hey guys, Stock Saturday, and it's a bit of a divided week, but I'm actually up about 1%, a couple of thousand, while the S&P is down a little under 1%, and the Nasdaq is down 2%. So the sort of divergence might be starting to happen in my portfolio. Obviously very different to the market. But yeah, up while the Nasdaq's down, I'm pretty happy with. Sort of benchmark myself against sort of the S&P and Nasdaq, even though I haven't got a sort of techie portfolio, just because it's a sort of a very different portfolio and a sort of, I guess, somewhat high risk portfolio, even though it is, gold heavy, which is sort of considered risk off. But yeah, I just think because it's sort of so different, it's probably best to go for a sort of growth benchmark. But yeah, let's have a look at some of the news. So I always like to check in on the Taiwan Semiconductor monthly revenue. I think this is a really handy sort of tool for sort of the whole semiconductor industry, really. A lot of the fabless companies, AMD and Nvidia and people like that, all use TSMC, and yeah, they don't give you sort of any numbers in terms of like July and August before their sort of quarterly earnings. So I think this is a good way of sort of getting in on that info before it comes out. And the July number is 4.9% down on last year, 177 billion new Taiwan dollars. And yeah, so it's down pretty much as they were predicting, sort of a slightly down year, maybe a little bit of growth. Obviously, you see the first sort of couple of months here were up on last year, and this is still well up on sort of 2 or 3 years ago. So yeah, that's okay, I think. Hopefully they can sort of eke out a little bit of growth sort of towards the end of the year. They're at 3.7% down so far for the first 7 months, but yeah, if they can sort of bring that back to flat, then I think that's fine, and then hopefully sort of go again next year, but we'll see. So we had Cleanspark's earnings, similar to sort of Taiwan Semiconductor, really. This is you kind of know how well roughly the earnings are going to be because they give out monthly numbers, and you know the price of Bitcoin, obviously the underlying commodity. So yeah, the earnings aren't really a huge surprise. We know they're at 9 exahash now, on the way to 16 exahash, but they're saying it's now fully funded. So they're saying they've got 90 million in cash and 1,200 Bitcoin on the balance sheet. So some of this cash looks like has come from dilution. And yeah, the 1,200 Bitcoin, they're starting to sort of hodl their Bitcoin rather than sell it all, which is pretty good, I would have thought, rather than sort of selling everything for expansion. If the expansion is now fully funded, then there's sort of little need to be selling all of that, and they can start piling it up, hopefully ready for the sort of bull run in the next 2 years. So balance sheet as of 30th of June was 21 million and 13 million in Bitcoin, but it looks like hopefully they've timed the share price rise quite well in July, and they've issued shares at a reasonable price, coming down to, and sort of, yeah, current liabilities 37 million and total liabilities 49 million, which is very solid. We've come down to debt. This is 10 million or 10.7 million in long term and 7 million in short term. So they've got way more cash if they've now got 90 million in the bank. So yeah, very good. And coming down to shareholders, shares outstanding, common stock 131 million or 131.7 million. So I've been modelling for quite a long while, for sort of probably middle of next year, once the expansion is sort of fully completed and up and running, for them to be at 150 million shares. So Be interesting to see. Obviously, they do share-based compensation, and this does trickle up even without expansion. But yeah, it'd be interesting to see if we get to sort of 16 exahash middle of next year and don't get to 150 million shares, because then I would be able to adjust my model downwards. But we'll assume they get to there, or might even be a little bit more. Have to see. But yeah, that's good news. The stock responded very, very well to that. It's up 23% for the week. So that has sort of been a quite a large saviour of my portfolio. We'll come to sort of what has gone down. So from what has done very well in the last week to what has done very badly, Coeur Mining released their second quarter results, and it sort of has not been taken particularly well, but I thought was sort of okay, to be honest. Maybe I've been expecting less of them than everyone else, but yeah, they've reduced their expected forecast for the year to between 304,000 and 352,000 ounces of gold. One of the mines sort of not doing quite as well, but the Rochester expansion is 97% complete as of the end of July. So yeah, that's going to be sort of ramping up before long and should sort of offset that loss. So just coming down to their financial highlights, gold sort of kind of have to ignore revenue. People would be wanting revenue growth on a normal business, but this is dictated sort of entirely by the gold and silver prices and obviously how much they're mining. But yeah, the sort of net loss again is sort of affected by the expansion. So I'm not really too bothered about a net loss at the moment. Shares outstanding has increased a bit again, 333 million shares, up from sort of 278 million last year, as part of the expansion as well. Would rather that than them sort of taking on a huge amount of debt. I don't mind sort of getting diluted, to be honest. Obviously, if they're expanding operations, that's fair enough. And average costs, I'd rather they sort of did a proper all-in sustaining cost rather than this, but it's sort of almost the same. Cost applicable to sales is up quite a bit from last quarter, but this is sort of largely down to the Kensington producing less, so not horrendous. Silver up as well, but $1,464, if that sort of stays where it is maybe or comes down a little, that's not too bad, with sort of gold at $1,900 to $2,000 and hopefully sort of going well north of that next year, or maybe even sort of towards the end of this year. So yeah, I thought that was reasonably good. So I'm really focusing on the guidance at the moment. Obviously, it's not sort of a paying, dividend stock at the moment. That's fine. It's growing, ready for hopefully a nice bull market in gold and silver. And their updated guidance now, mostly the same. Just a drop in Kensington. Down to, that's where the drop has come from, down to 84 to 95,000 ounces a year. So I didn't think that deserved a 10% drop in total stock price. The sort of total ounces is not down 10%, and with the expansion could obviously be sort of rising well back up to previous guidance. But people aren't happy, I guess. And yeah, the sort of all-in sustaining costs, or costs applicable to sales, at the Palmarejo project is still sort of at $1,000 margin nearly, and sort of $10 on the silver, or sort of $8 now with the reduced silver price. And yeah, Kensington with the sort of reduced production is now at sort of $1,700, which is Not great with today's prices, but if we get a sort of rise to over $2,000, then that's okay. And the smaller wharf at sort of $1,300, which is okay, really. So yeah, 300,000. I'm sort of budgeting on 300,000 ounces of gold and 10 million ounces of silver. That'd be fine by me. It's what I'm basing my sort of models on for the next year, and certainly my option buying. So yeah, if they exceed that, I'll be happy enough. Sort of theory here is the capital exploration costs will come down sort of drastically, obviously once the expansion has finished, and sort of I'm banking on really this sort of small stock falling out of sort of screeners and off people's radar and that sort of thing, because they're making very, very low profits or a net loss, and then if they're doing sort of decent production numbers at a reasonable gold cost with no or very little sort of capital costs, then they'll be posting a decent profit, and all of a sudden come onto people's radar, and maybe you start getting profit expansion as well as multiple expansion. And I think sort of these are a $800 million market cap now with this drop could be an incredible hold, really. So that's the bet. So looking at Fortuna silver mines, they're my sort of slightly smaller than Coeur mining bet. Kind of a little less bullish on them, but still fairly bullish. They have got gold production at 64,000 ounces, which is sort of pretty much on track. Silver production 1.2 million ounces, which is a little bit lower than was sort of hoping, but not too bad. All-in sustaining costs per ounce of gold at $1,799, which is high, but they have their expansion pretty much up and running. The new project, it's not really an expansion, the Segala mine in Ivory Coast took the first gold pour on May the 24th, so it's not really going to be in the Q2 numbers. First gold shipment taking place in July, so yeah, it's now sort of up and running, and they're predicting sort of around $1,000 all-in sustaining cost at sort of 120,000 ounces a year. So essentially that sort of capital expenditure has now come to an end, and they're going to start printing money. This sort of is the theory with them, really. Again, similar to Coeur mining, that they sort of wouldn't be on many people's sort of radar and screeners and that sort of thing, because they're sort of posting terrible numbers. So unless you're sort of really willing to dig into the numbers and see why, then yeah, people, I would imagine aren't going to do this with what is sort of technically a penny stock, sort of $850 million. Then yeah, I'm hoping they start sort of once they start posting decent money, then people will start to sort of notice, and we could get a bit of multiple expansion. If people are sort of willing to pay, say, 10 times earnings, maybe 12 times earnings, if we get a decent run up in the gold price, then yeah, I think you could easily see this at sort of $2 or $3 billion. So there's a reasonable amount of upside if it can go well. Their sort of balance sheet seems okay. Obviously, always could be better. They've got a bit of debt. But they've got 90 million in cash. So yeah, basically all sort of looked on track, really. The new mine has started. The other mines are still sort of expensive and high cost, which isn't great, but yeah, overall their cost is going to come right down to sort of more like $1,400. So yeah, that's okay. Obviously, it did rise. They've sort of said average cost or all-in sustaining cost was $1,688 compared with 1,151 same period last year. So that's not good at all. They've obviously had costs rise, and production has been a little bit lower. But now with the new mine, in theory, the new mine itself is worth sort of the entire market cap. So the rest is just gravy. Once they start, as I say, posting a decent profit, then yeah, people may even just look at the new mine as being sort of worth the entire market cap. So let's see. So moving on to Himax, starting to feel like sort of Groundhog Day a little. They're sort of always very, very optimistic on the future, and they're always sort of saying this quarter's been a bit rough, but we're expecting things to pick up. But they did actually beat gross margin and sort of earnings ever so slightly. Obviously, it's fairly poor estimates on there, so not too difficult to sort of beat poor estimates. I always sort of think this is a little bit misleading. If you make 500 million in a quarter, and then they're estimating you to make 200 million, and you sort of end up making, say, 235. These aren't exact numbers, but obviously it'll be, the headline is Himax smashes earnings, and you think, yeah, but it's down 50% from last quarter. So yeah, I sort of think that across the board with the industry at the moment, they sort of put a really low estimate in, and then the company beats it, and that's positive, and share price rockets up, and you think it's still bad. But yeah, you've had sort of Q3, they always sort of forecasting positivity. They're still saying Q3 will revenue decline 7%, but they're expecting towards the end of the year inventory to come right down to sort of normal levels, and yeah, the automotive sector should be sort of continuing to grow. So they're expecting sort of decent numbers starting sort of maybe fourth quarter this year and into next year. So yeah, it's not what they were saying last year, to be fair, but I guess no one was expecting things to be quite as bad as they are. Interesting as well, the Wise Eye products. So this is sort of the motion eye tracking and that sort of thing. They're in Dell laptops from the looks of it, and sort of video doorbells, largely in China. But yeah, they sort of, they have motion sensor chips, and that's sort of a reasonably new growth avenue, I would have thought, anticipating growth extending into 2024, they say, but automotive is going to be sort of the big driver, really. EVs obviously having an enormous amount of chips and sort of screens and heads-up displays and gigantic tablets right in the center of the center console. So yeah, that should see a decent sort of growth over the next decade, really. So I'm pretty happy. The numbers look sort of terrible, of course, but still positive for the future. And yeah, their sort of debt hasn't come down, to be fair. Just looking at sort of balance sheet, it's not where I would like it to be. They've still got quite a lot of short-term debt, which they're going to have to, I guess, refinance at some point if they're not going to pay it off, and that will be at sort of much higher rates. So that's not great, but yeah, I think the overall sort of market cap justifies more than justifies where they are. So I'm pretty happy. So just looking at the news, it was relatively quiet until Thursday, really, when you had the US CPI numbers. So I always focus on core CPI rather than headline, because I think it's, Jerome Powell has sort of made it very, very clear that that's what he focuses on. He says, whether this is true or not, I don't know, but he says headline CPI would generally follow core CPI. And you have had headline CPI rise this month. a little less than was expected. It was going to be 3% to 3.3, and it's gone to 3.2. So obviously the headlines have all came out and said shock horror, inflation is rising, when it was well forecast in advance to be rising, and yeah, that's just largely down to energy prices, it looks like. If you strip that out and look at the core inflation, that was better than expected, 4.7%, which was expected to be unchanged, 0.2% for the month, which if you annualise, last month's and this month's, you're at sort of 2.5%. So yeah, I do think people get a little bit sort of worked up looking at headline CPI and sort of drawing all sorts of conclusions. We're back on the up, we're going to go to 7, 8, 9% inflation again because it's bottomed and it's now going to rocket up. You have had oil prices rise and natural gas prices rise recently, so I'm sure that'll have an effect, but yeah, I think probably best to just focus on sort of core inflation, as that is what the Fed at least say they look at. So yeah, that was sort of interesting Thursday. Jobs numbers, the sort of continuing jobless claims was a lot better than expected, but new claims were worse, so a bit of a mixed bag there really, I guess. And yeah, Friday didn't really have too much. Had UK preliminary results for GDP, quite a bit better than expected. So yeah, no recession for the UK if those numbers hold up. Do often find these sort of provisional numbers don't hold up, but we'll have to see. You had a little bit of sort of manufacturing news as well. Manufacturing production in June was quite a lot better than expected, so guessing that is what has caused a reasonable amount of that GDP increase. So that's pretty good, manufacturing numbers being good. And then PPI, the sort of basically the leading indicator, people say, of inflation, was sort of slightly up on core and sort of slightly up on headline as well, or sort of flat on previous, but it was expected to come down a bit. But they're sort of very small moves, so nothing huge there. So that was the news. Just looking at the portfolio, nothing really, very little has changed in the invest account for sort of quite a while now. Still holding on to Porsche and the emerging markets ETF. Haven't sort of felt the need to suddenly sell those down and sort of be buying other things elsewhere. I think that would be more sort of something for a bit more of a severe crash. But yeah, Stellantis sort of still riding reasonably high, doing quite well. And looking at the ISA is where I have made some changes. So another 3 shares of the overnight sort of money market type fund sold, down to sort of 6,000 now. And just yet again, I'm basically averaging into Coeur Mining, Equinox Gold and Fortuna Silver Mines. Sort of when the drop happened, I saw that as a reasonable point to be sort of buying some more. Reading the earnings and sort of not really agreeing with the drop, I thought I would buy some more. So Coeur Mining is now £9,000, Equinox 8,000, and Fortuna, as I say, sort of probably the less bullish of the three, 5,600, and my sort of cash position, if you like, money market fund at 6.5. So still got a bit of dry powder to be buying more and sort of averaging in probably towards these miners. Obviously I could have lumped it all in earlier, but so far I've been better off averaging in. Obviously I would have been better off, even more better off, just waiting and buying now. I've obviously bought a little bit early, but that's nature of the beast. You're never going to time the bottom, and with the sort of hopeful move that I'm eyeing over the next year or two, then hopefully I'm not going to be all that bothered about sort of 20 cents better prices. So best to just be in them in case it never did come down. But not all at once. I'll keep some of that cash on the side. Can always put it in something else if the gold and silver do rocket up. And yeah, as I say, Cleanspark up sort of 23% for the week. So that has caused me to outperform the markets, even with the gold and silver loss. REITs have sort of barely moved at the moment, still sort of chugging along down at reasonably low rates. American Tower and sort of Vici have slightly come down. These sort of UK ones are relatively where they are, stagged down a little bit as well. So yeah, we'll see where things go. The IG ISA sort of, as I say, Cleanspark is 146%. That doesn't include FX, so it'll be, I think, a little bit worse than that, but yeah, well over 100% again, so that's pretty good. Pan American sort of doing okay. Atalaya Mining is doing reasonably well as well with the copper price up, so yeah, that's back sort of reasonably well in the green now. And the Chinese tech sort of again had a very sort of up and down week. It sort of ended up near enough where it was thanks to a drop on Friday. And yeah, with the I put a little bit of money in Interactive Brokers on Friday, but it didn't clear. So I bought a few more options with the cash I had in the account, but I was hoping to sort of buy a little bit more on Friday. Maybe I'll be able to on Monday, but more options, and hoping to buy more. So yeah, we'll see where this goes. So that's portfolio for the week. Let me know your thoughts in the comments below, how your portfolio's doing and sort of what you're buying in these weird times, and like and subscribe. See you soon.